Hi, I'm here with Nick Watterson of Elliott's. He's the video games go-to guy with everything for everything business and tax in the UK. We're here today to talk about some of the types of things that developers find challenging, namely tax and financial structures. Very often video game developers are great at the creative side of things and logistically making video games. But tax and business can be neglected. So in business, it's very, it's vital actually to get these things right. And also there are some opportunities at the moment with the BFI initiative and the government video games tax relief scheme. There are real incentives to make video games in the UK. And it's a real gift actually from the government to the industry. So Nick, welcome. Really glad to have you here. Thank you for joining us.
No, it's great to be here.
Let's start at the beginning. If a developer, be it an individual developer or a small studio, medium-sized studio, what do you suggest with regard to sort of forming a company structure?
Yeah, well, setting up a company is a really easy thing to do. It's never been easier. But it's just occasional things you've just got to look after with the admin side and making sure you set up correctly. I mean, for the sake of a small one-man band setting up, it's quite straightforward, simple thing to do. Get yourself set up as a company and then just go on from there. Where it gets a bit more complicated then is maybe there's a couple you're involved, and you've just got to think about from when you're setting it up, what percentage, how much is everyone going to own, who's doing what, and then how best to really sort of going forward, how you can set that up. So things like, if there are a couple of things like shareholder agreements are really important, just so you're all set up at the start, so everyone knows exactly what position they're in, and it might sort of help further down the line. God forbid there's any issues between all you later on, but it's just so you've got it all set out at the start, just so everyone knows exactly what's going to go on.
Everybody starts off as friends, when they get together and make these agreements. Yeah. And then sometimes when there's big money involved, things can change and people, have different agendas. So I imagine it's very important to keep yourself protected in the shareholders agreement, and also perhaps put incentives in there.
Yeah, so I mean, it's best for the world. You're setting up a company with your best mate, and everyone's like, "Oh, it's going to be great. We're never going to have any problems." But it happens. We've seen it. People have fallings out. It's the way things are, and it's just as long as you're just straight with each other at the start as to what can happen, so you can set up that. If one person just, or it could be just that someone doesn't want to do it anymore. They've lost it. They've lost interest. They want to do something else, but you can set up at the start where, right, we know, if someone wants to leave, then they, the other person can buy them out their share for a certain amount, set up at the start, or, God forbid someone passes away as well. What happens then? If you've got it out in the shareholder agreement at the start, so when they pass on, the shares just go to, next of kin. Now, if they're not interested, they don't want anything to do with the company, then it protects you then to what happens to those shares if they come back to the other owner or whatever. And as well, I think you touched on it, incentive schemes as well, something to look out for. When you start off, there's not a lot of money in there for the company. You don't, if you're maybe trying to pay for work or getting someone else involved, you say, oh, we'll give you, a certain percentage of the company to do that. It's just be careful, because, it's an easy way to sort of remunerate people for what they're doing. But, years down the line, if you're then suddenly coming to sell the company for whatever amount, and then you realise, oh, but 20% of it's owed to someone who may have, just done some artwork for you 2 years ago, which you didn't think about at the time. But it's just sort of thinking about it and just working out, because that's the problem, is if you give away too much too soon, just try and be a bit smarter about it.
Yeah, thank you. I mean, I've often wondered this, what if you do give some shares, to somebody who's important in the company, and then they subsequently leave? Is it normal to give those shares back, or for the company to pay them out, or what?
It depends on the person. I mean, if they are a nice person, You know, they might just agree to sell them back to the company at a certain amount. But it's the problem then is once they have those shares, they own them. And based on, you know, depending on the company, what it's done, there's a value to those shares. So, you know, although you might, you know, there might be £1 shares that you've given to them, actually, because the company's got some, you know, they've developed the game, there's some intellectual property in that company's worth a certain amount of money. So just to buy those back, there's going to be a, you know, it might not be a cash gain, but the HMRC will treat that as a gain on disposal. So whoever it is with those shares, once they get rid of them, they'll be taxed on that gain. So it's just, again, it's being careful as to what happens with them. But yeah, I mean, we've had it before where someone's held on to shares because they didn't want to get rid of them, and then as well, it depends on the percentage, you know, because the shareholders that are staying in that company, that might be that they don't own enough of it to do what they want to do with it, and then they've suddenly got to track down someone who left the company 2 years ago who's got, you know, 20% of the shares, but they can't do anything with it. But it's, yeah, it can be tricky, but it's about being smart with it at the time.
Are there differences in setting up the structure between small indies and larger indies at all?
Yeah, I mean, it's obviously a lot easier when it's small because, you know, it could be your one-man band, set up a company, off you go, you know, there you go. When there's more of you, it just makes it more complicated. But I mean, if you're, it's more likely you're going to be setting a company when you are small, because if you're established, it's probably likely you've already set that company up, just because it adds an extra layer of protection to you, because that's a separate entity then. You know, when you grow, you're taking on more contracts, things like that, then it adds a layer of protection to you as the shareholder, that it's a separate entity. So if anyone, you know, if there's any repercussions on it, it's the company that has to deal with it rather than you personally. So it's a bit of legal separation between you and the company.
Is it expensive to set up that sort of structure?
No, I mean, setting up a company's easy, really easy. You know, you could probably do it personally in about 10 minutes. It's really not a complicated thing to do. It's when there are more of you, it's then when you think about shareholders agreements, how you want to look at it going forward. But I mean, shareholders agreements aren't expensive to do. It's one of those things people don't think about when they start up, because it is that little bit of extra expense, but for something that can give you that much protection later on, it's worth spending that money to get one done properly.
And with regard to sort of the intellectual property of the company, that's held also in the company?
If you've already developed the intellectual property, then it could be that you personally own it, and then you can set it up. So you basically license it to the company to then sell the game on your behalf, or you can sell it to the company, in which case the company owns it. And then there's the tax, you know, advantages for either, but it's what you really want to think about is what is your end goal with that intellectual property. If it's you're developing the game, you just want to own that, and then, you know, you can live off it, but use that intellectual property again and again, then, you know, it could be that it's best for you to own it. But if it's if your end goal is to maybe sell or, you know, be bought out, then it's best to have that intellectual property in the company, because it's a lot easier to sell the company with the intellectual property than what it is than to sell the intellectual property by itself.
From a tax planning perspective, is there anything to bear in mind when setting up the company initially?
Again, it depends on the personal situation as well, from a personal tax point of view for the individuals involved, whether it's best to go along that route or a different one. But for the most part, it makes sense just to set a company up and then go that way.
So with regard to video games tax relief, as I understand it, the government will give up to 20% of the project costs in qualifying expenditure of those project costs back to the developer. Is that right?
Yeah, sort of broadly speaking, yeah, that is it. What it is, it's one of the reasons why we talk about being a company, because you can only claim for this video games tax relief on a corporation tax return. So that's why really one of the drivers behind setting up a company is to go for this sort of thing. Yeah, broadly speaking, if the company makes a loss, which you know, when you're developing, it's likely to be for the first couple of years because you're, you know, a year or so because you're developing the game and then you're not selling it until you're finished. In that case, once the company makes a loss, you can claim back 20% of that as cash from the government.
Great. And does all expenditure on the project qualify? Management, administration, stuff like that?
Yeah, I mean, it's costs to do, well, it's cost relation to the development of the game. So certain overheads, so rent and things like that may not, but if all you're doing is developing that game, then technically those costs are in relation to the development of that game. It could, you know, it may be further down the line where, say, you've developed one game and then you're about to sell that, and then you're starting developing another game. Well, there's a bit of apportionment you have to think about. Actually, you know, for the rent, well, you know, 50% of our time is spent on developing this new game, but 50% of our time is spent on selling this one. Then it gets a bit more complicated in thinking, well, actually only 50% of those costs in relation to the new development. So it gets a bit more complicated then, but broadly speaking, any costs in relation to the actual development phase of that game, yes, will qualify. There's some caveats around subcontracting costs. So there's a cap of $1 million on subcontracting costs, and it's European Economic Area costs that there's a cap on as well. So you can only say a certain percentage of your costs if they aren't in the EU.
Perhaps you could talk us through the process.
So first things first, it's a scheme that's developed to promote culturally British games. So there is a cultural test that the game has to pass, which is administered by the British Film Institute, the BFI. Just historically, because this is based on some film and television tax credits, which have been going for years. So when the government decided to do it for games as well, after much lobbying by Tiger and Ukie, that the BFI were the best people to administer the test because they've been doing it for donkey's years on the film side of it. So basically, you put in an application through the BFI. So there's an online portal. So basically, you just have to register, say, here's our game, here's what we're doing. It's a points-based system. So there are 31 points, potentially, that you can get. So there's 4 areas. So it's cultural hubs, cultural content, cultural contribution, and here's my last one that I always forget, personnel, obviously. And there's 4 areas, and you only have to get a minimum of 16 points of those. So things like if your development takes place in the UK, if your game is based in the UK, if your characters are speaking English. I will caveat this, it's at the moment, for the next just under 12 months, it's actually EU based because EU regulations. How that's going to pan out after Brexit, God only knows, but presumably it'll just revert to being UK, but we don't know at this point. And then basically, there's an application process. You have to submit things to the BFI, such as budgets for your game development, how much you think it'll cost. If you're saying that it's English speaking characters, you have to submit copies of scripts, storyboards, things like that. If you're saying that your staff are British or from the EU, they'll just want confirmation from an accountant that that's the case. So it could be that, as I've done it for a few, where I just pop in, see someone, shows us a copy of the passport, and I go, yep, that's right, send the letter off to the BFI along with the application. And then once that's done, you submit it to the BFI, and that's at any point during the development cycle. So that's an interim certificate, which says, yes, we've had a look at it, yes, this game's going to qualify, great. That lasts for 3 years. So basically then, that gives you the go-ahead. So come the end of your accounting period of your company, you calculate all your costs, you work out how much your costs qualified for the video games tax relief. You then go, right, we've made a loss, we're going to get 20% of that back. You submit that with your tax return, along with a copy of the certificate, just so they know that, yes, it has qualified. And then there you go. And then once the game is actually completed, you've got to do a final certificate from the BFI that just says, yes, this game's now complete and it's gone, it's British, and yeah, that then goes in as well.
As I understand it, you can get golden points by having it, a seriously culturally representative game. If it's a game set in Britain with British people, characters rather. If you then get that game made in the EU, as we touched on, is the qualifying expenditure still capped?
Has to be EU expenditure. So at the moment, so it's up to 80%. Well, yeah. Sorry, the cap works. It's because it's when you say 20%, it's like, we'll get into the nitty gritty. It's actually 25% of 80% of your costs, which is where I was getting to the 20% with the cap. So it's just broadly speaking, it is 20%, but that's where the cap comes in with the 80%. So it's got to be EA, which is EU expenditure.
What might slow a developer down in the process?
I think you got to be careful because although there are 31 points available, don't muck around with any that you're not sure you're going to get. You only need the minimum of 16, so just go for the 16 you're going to get. Don't put down, oh, we might get these ones, but we will get those. So if we put this in with like, oh, we qualify for 20 odd points, then we're going to get at least 16. Just go for the 16 you want, because the problem is if you don't, if maybe you don't qualify for some of those points, then it's going to be back and forth with the BFI, and it just slows the process down. So I just go for this minimum you need and the minimum you're going to get. I will say this to the BFI, they're really helpful. So I've had it before where I just called them up and asked them a question. They've said, yeah, we don't think that will qualify, but have you got such and such a body as part of the team? And went, yeah. Oh, we'll just put them down as being British then. So that works out well. I mean, they're really helpful.
With regard to the development process, is there anything we touched on, if it's got to be a UK-centric product, you can have your UK staff working on it. At the moment, people in the EU, until we don't know what's going to happen with Brexit. Yeah. Is there anything else to bear in mind with the development process along the way?
I think it's just being mindful because of the British aspect of it, that maybe at the start of the development cycle, when you're thinking about planning out your game, just maybe bear those things in mind. So if you're only a small team and you're only going to qualify for a couple of points around the British team, maybe because some of these points you can get if it's if you've got like an indeterminate location. So if you set out in space or in a fictional land, as long as it's not too much like a certain country. So it's just maybe thinking at the start of the process and just maybe tweaking how you're going to develop the game. That maybe think about how this fits into the points aspect of it, and if you're maybe going to miss one, maybe just tweak the game slightly so you do qualify. Because at the end of it, no one likes to be mucked around with the creative process, but if this is going to help you get the game made, then it might just be worth that sort of compromise.
Yeah, I see. So fictional lands or games set in space can qualify? They
can do, yeah.
How would you tweak them? Are you saying like, well, you're in space and let's say it's a space station, it needs to be a British space station and you might put the on the side?
No, it's more safe, like the game's taking place in a fictional, well, basically if you're going to set a game somewhere maybe in Eastern Europe, somewhere like that, maybe you aren't setting the game in Eastern Europe, maybe you're saying it in a fictional land that might resemble Britain, maybe, because a lot of European, medieval times aren't that dissimilar, if you know what I mean. No offense to some countries.
No, sure. Okay. So you would what you're saying is just make certain choices that make it easier to get the points then. Don't make it hard for yourself, what you're saying, yeah.
Yeah, exactly. Try and make it as easy for yourself as possible, because if this could be the difference between you getting all the funding you need for the game and getting it made and not, then it might be worth doing.
As I understand it, the tax streams can be quite complicated, so you have to very carefully lay out your expenditure in a certain way for HMRC.
The ones we've done, HMRC haven't queried them, so you don't actually send the entire comp out to HMRC unless they want to take a closer look at it. But I think it's just being careful how you, I'll touch on something later on about how to get yourself ready for these sort of things. It's, you know, it's good to be, you know, organised and keep track of all your costs as you're going along. So if, you know, if you've got good advisors or, you know, good bookkeeping or whatever as you're going along, then you can keep track of each stream. I mean, if it's just one game, it's quite easy to go, well, here's our development costs, you know, here's the ones in relation to that game, and it's fine. It sometimes gets a bit trickier with, say, if you're a studio with, you know, 15, 16 apps on the go at one point, trying to track the costs in relation to each, in which, you know, one of our, we've got someone we work with who, you know, they do have that, but they're set up quite well that, you know, they know exactly which cost relates to which game, and they can track it that way, which, you know, use things like online software, which, you know, you can allocate by project, which makes it a lot easier. But that's when you're sort of further down the line and you're more established and you've got more than one game at the same time.
Yeah, great, thank you. It sounds actually quite straightforward.
It can be. I think it's one of those, it's as complicated as you want it to be.
What's the sort of time period? I mean, how often can you make the claims to the government?
Well, so it goes, so for the BFI application for the certificate, you can make that any point once you start development. So I'd always suggest try and get that done as soon as you can, just so then you've got it there ready to go when you do come to it. So like I was saying, for the video games tax relief, it goes in with your corporation tax return. So for a company, each year you have to submit a set of annual accounts to Companies House. And then as well as that, you do a corporation tax return, which goes to HMRC, and then it's whether you pay or reclaim tax on that. So the video games tax relief goes in with that. So that's a once yearly process. And that's how that goes.
Okay, I've heard that some people are submitting every quarter or every 6 months to be able to claim back the expenditure sooner. Is that possible?
Then it really depends on how much you're claiming back, because it gets a bit more complicated. The administration, it's creating that balance of sort of how much you're spending on, you know, the administration and the putting the claims in and paying for accountants or whatever, and then the actual cash you're getting back in on it, because it does be more expensive, and it's something really to think about again further down the line. And as well, it's one way of setting up a corporate structure. Maybe when you're more of an established studio and you've got more than one game going, it's better to put a structure in place that maybe you have your main company, which is out there, which then sells or publishes the game, and then you have subsidiary companies under that main company, which for each game, which just concentrates on the development costs, because then each company will have its own tax return. So instead of having one big entity with maybe not a lot to reclaim, you might then suddenly have a lot of companies which are getting claims for each game. So but again, it's when you get to that point, sort of before you really go along that path, just working out the admin and time, what you can spend on it, and if that's going to be beneficial.
Well, that's great. Thank you. That's really clear. So once you've made your claim, let's say we've made a claim, our annual claim, we know we've spent a lot on the development and we can get that money back. How long does it normally take then to get paid out?
I mean, we've had it really quick. I mean, HMRC have sort of within about 4 weeks, so 28 days, we've got the claims in, so which is fantastic. It's really something that I know as a government have pushed, and people have, it's one of those things to show that, oh, how great the UK is, and look at what all we're doing for the game development industry. And it's a massive booming industry which they're trying to do a great deal to support. So I think that there's someone behind the scenes sort of giving a bit of a kick in to try and get it done as quick as possible. But whether that changes over the future, because I know HMRC have a lot on the plate at the moment with Brexit again, but it seems to be a fairly quick process at the moment. So fingers crossed it keeps going. I
think Tiger get a lot of credit for lobbying the government and helping to push this through. Is that right? Plus, is it the UKIE?
Yeah, Ukie have done a great job, and Tiger as well. Yeah, we're a member of Tiger. the other body. So yeah, no, they've done a great deal to really push this for the industry, and it's they're really trying to get people to go and do it. Now it's in place, trying to get everyone to go for it. So there's lots of people who aren't doing this, and they should be, because it's just free cash from the government, really.
Yeah, no, it's great, and what a great incentive, you know, to push the UK games business. You know, we've always had a really good rep in this industry.
Yeah.
So, thank you. So that's made it really clear for. I hope our audience are going to get a lot of value from that. To VGTR. Another thing that you guys specialise in, or at least involved with, is around small enterprise investment schemes. I know that they can be, in the film industry, they've worked very well for a number of years, and now in the games industry too. But a lot of developers I speak to, they don't really understand it. It can be quite complicated. I think you need special permission from the government as well. Can you tell us about that process?
Yeah, it's quite a niche area, which is why I guess a lot of people haven't heard about it or really know about it. So these are investment schemes. So it's not for the benefit. Well, indirectly, it's not for the benefit of the company or the shareholders themselves. It's for people who might be coming and investing in the company. So it's potential investors. They will get the benefit from these schemes. So what you've got is enterprise investment scheme, which has been going for a long time, which is for slightly larger companies, maybe going for a few years. And then you've got the seed enterprise investment scheme, which is for small startup companies. So for people who go in, you know, their first year or so of trade, not much going along, but they've got an idea and they want to grow it, but just need some investment to do it. So these are government schemes. Basically what happens is wealthy individual comes along and invests in the company. As long as it qualifies, then they get a tax relief on part of their investment, as long as they can show it is. It's a government scheme sort of try and de-risk investments to try and get people to invest in companies. So what you can do is to show that, to potentially, if you're going to potential investor to say, we've got this great idea for a game, just need a bit of cash to really get it off the ground and get it going. You can actually apply to HMRC for what's known as advanced assurance that says, look, if you invest in this company, we will grant you this, the tax relief on it. So it's very, say straightforward, but I'm an accountant, so it's probably straightforward to me. It's basically, you just got to write to HMRC, show that, here's why we think we qualify. So, just showing that, here's the company documents here, we're only so old, here's our latest accounts, or if you haven't got any accounts yet, just, buy me some, management accounts so we can help just put some figures together. So here's the position of the company at this point. Here's why we qualify, because there's certain things. So I mean, there's new rules recently brought in. So it's supposedly risky investments, hence why the film industry and things like that. So it can't just be necessarily a corner shop or something like that. It's got to be a sort of risky investment. Do that, and HMRC. You write to HMRC and say, here's why we think we qualify. They then come back and say yes or no. But as long as you give them all the information that they're going to need, they usually say yes. And then when you go to see an investor, you can go, oh, hey, look, we've got this, invest in us, because you'll get tax relief on investing in us, which is great. And then hopefully it makes it easy for them to make that decision, and you're happy and they're happy.
Thank you. And is that a costly process for the developers? To
get the assurance? No, not really. We usually charge sort of the person a minimal fee just to sort of go through that with them, but it depends how savvy the developer is. The stuff they can get together themselves, or we've had one that did it themselves, then it went through. So it's sort of much help as you need, really. There's quite good manuals on the HMRC website if people want to look at it and see if they qualify, and then there might be some we can always answer any questions.
And is there any timing preference on this? I mean, is around sort of, between January and March when people are really looking for these tax breaks. Is that the best time to be out?
Yeah, it helps. Yeah, that's when people suddenly go in. Oh, tax year end's coming. I need to do something. So I think a lot of this came about because it's becoming more prevalent because caps on amounts people can put in pension schemes. So people got cash that they want to do something with, can't put it in a pension to get tax relief that way. So yeah, comes to the end of January, February time, realise, oh, how do we get tax relief? They can invest in one of these schemes. So for the actual advance insurance, you probably want to get that done before the fact, and then sort of people might start looking, that point, and then you can sort of turn around the investment after that before the end of the tax year.
Thank you. That's really great. And do you guys actually help developers find funding through the SIS schemes, or do you just prepare the documentation and the numbers for them?
Yeah, we prepare. We do have contacts, so we've got people who are sometimes looking out for things to invest in, so we can help that way, or by networking. I know some of the guys here involved with the Surrey 100 Club, which is a club of investors that meet around here. So we can. We're not. I wouldn't say we're particularly a firm that specialises in that, but no, we can help.
And what's the best way for a studio to get ready for these kind of schemes?
Planning, just getting organised. I think so for the EISS, EIS, thinking about it before you, I'd say before you think about going out for investment, getting your ducks in line with this, so that it just makes it easier for you to present yourself to an investor. It just makes you a bit more credible to say, look, we've actually thought about this. We know what we're doing. We're a good bet.
And can you tell us about some of your particular successes at your company?
Yeah, I mean, we've helped people go for SIS investment. I've not been involved in any that have sort of failed, so we've always got the advanced assurance. There's the odd one where HMRC haven't read the document right, so you just have to point out, look, there's the information you wanted. But so we've helped people get investment. I don't really know how much I can say, client confidentiality and all that. But
yeah, sure.
But yeah, no, it's no, and as well with the video tax relief. If we go back to that, I mean, one of the ones I've just done recently, we had a guy who was trying to get his game out, starting to run out of cash, starting to get really worried about it, and we just went, right, we'll concentrate, we'll get everything done as soon as we can, straight after the year end. So we managed to get that turned around, got the into HMRC, got the cash back in. That allowed him to finish the game and get it published, which is exactly what it's there for and what we need to do. So, and in fact, he was able.
And I mean, that's a great story. Have there been any nightmares?
No, hopefully.
Well, great.
No, I mean, no. The only things I can really say, if we go back to this, we have had it before. We say like shareholders agreements, talking back at the start, where you say it doesn't happen, but we've had it where maybe one of the shareholders may have been involved with the wife of the other shareholder, and that fell down. And they ended up not talking to each other, so trying to resolve that was a bit of an issue. But
yeah, quite difficult to get that into the shareholders agreement, I imagine.
Yeah, there wasn't really a clause for that, unfortunately.
Are there any other things to bear in mind? I mean, how about compliance? Across the investment side, the VGTR side, VAT. What should a developer bear in mind with regard to compliance?
Or sort of your accounts, your year-end tax, your VGTR, that can all be wrapped into one, because you sort of try and you get all that done at the same time. So that's just an annual thing. Once you've got your company set up, then you've got you know, depending on when you set your year end, you then got a year process where your company's going, and then at the end of that year, you can start thinking about the accounts. You've got 9 months to do the accounts after that, depending on when you set it up. But for these things, what you want to be looking at is, if you're going for the VGTR, you want to be getting those accounts and that corporation tax done as soon as you can, because that's what because you want to get that cash in as soon as possible. So it's basically, it's a thing about just preparing. If you can keep on top of all the you know, your expenses, everything, as you go along, get that PFI done. You know, we can help out and get that sorted and all your ducks in a row. And then once the year end comes, it should, you know, it's just a straightforward process to get it done and get it out. You touched on VAT there. I mean, VAT is a minefield, and that's before you get into the whole issue of digital sales and things like that, which just adds a complete layer of complexity onto it. VAT's a very specialist area, and I'd always say take care around VAT. Take advice on it if you can. Especially online sales, there are some very specific rules about this.
I think they change as well, and
Yeah.
I mean, from speaking to you know, just like from the perspective of this conference, you know, we have to collect the VAT from the tickets that we sell, and those tickets can come from around the world, you know. So when you try and clarify the rules, sometimes you can't get the straight answer, or the documentation varies from what you're told from the VAT office. Is there a simple policy at the moment that you can share with us?
I never want to say so with that, just in case. But I mean, for the most part, if you are a developer and you're selling digitally, so if you're selling on an app store, so for something like Google, something like Apple, that makes it a lot simpler. Just because, or Steam even say, that makes it a lot simpler. Just because how those platforms tend to work is, you sell to them, so you license the game to them, and then they sell it to the end consumer. So what you end up having is just, say, a monthly sale to each one of those, which is then just a straight sale, you to them, and you just deal with that. Where it then gets complicated, because that's business to business, sorry. So you're a company selling to a company. When it gets complicated is when it's you selling direct to consumers. And they, like you say, they could be based anywhere in the world. Now the VAT rules changed, as they tend to, a couple of years ago, whereby they changed the rules regarding place of supply, which is a VAT thing, for digital sales. So if you're selling to someone in the EU, say, that country, then technically that sale of that digital game, so game we'll go for, takes place in that country. So no longer is it you selling from the UK, it's a UK sale, there you go. That sale is now taking place in Germany, Ukraine, anywhere like that. So that's, the government brought in this thing called the VAT MOS scheme, which is mini one-stop shop. That's what the MOS bit stands for, which is, it's a way of simplifying it. So if you collect data on where you sell stuff, then instead of you actually having to go out and register for VAT in Germany, say, it's a place where you can just go and submit your details of, here's all the sales we made to people in Germany, here's all the sales we made to people, you know, in France, and it collects the info that way. Because that's one of the complicated things as well, because although in the UK we have a VAT threshold of 85,000, so if you're only making, say, you know, if you're, you know, one-man developer selling, you know, making enough to live off, like, you're only selling like, you know, less than 85 a year, then you don't have to register for VAT. But for places like Germany, there's no limit. So suddenly, once you make a sale to Germany, you've got to VAT register in Germany. So that, you know, this whole change of supply issue was really creating some issues, and then this VAT MOS scheme sort of simplifies it.
I mean, is it likely to follow again, change again, rather, due to Brexit?
I'd imagine so. That is the problem. Yeah, it's going to be interesting over the next 12 months to see what exactly happens. But I think that's the same with anything. Until they sort of set down exactly what's going to happen, we don't know.
Thank you for that. I mean, it's very helpful, because it's an important and difficult issue and has to be negotiated correctly, because otherwise you can end up with a surprise VAT bill, which you don't want.
Yeah, it is complicated, and yeah, it sometimes happens where you don't take advice. You go along happily, merrily, thinking you're all okay, and then suddenly you, or maybe it just happens to be that you think, oh, I'm now going to finally go over the VAT threshold, so I'll register, and then first time you get an inspection from HMRC and go, oh, you should have registered 2 years ago. You owe us this much VAT, which it's not pleasant, and it's not nothing. No one wants that.
And do Elliott's help developers with that?
Yeah. So we've got a VAT team. We help out queries on VAT. We're now specialists in the industry as well. So yes, that's something we can help out with.
How can Elliott's help developers? What's the range of services that you have?
Cool. So a bit about Elliott's. So we're a multidisciplinary firm. So basically, we can help out with everything from an accounts and tax point of view, from everything that you'd want from a practice. The only thing we don't do is insolvency, but you'd hope we wouldn't need it. But it's worst case scenario.
Hopefully not.
No. But no, but I say I've got a specialist interest in games developers. It's one of the areas I'm interested in. So it's one of the areas where I drive in our firm. So we have links with Tiger, I've said before. Go to I tend to go down to conferences where I can, so down to develop things like that. Help out with with a number of developer clients who we can help. How to set up, like the stuff we've said, how to set up, best way to structure. Your accounts, your bookkeeping. Help out with forecasting. If you're going out for investment, we can have a look and sort of go, right, here's how are you looking? How can we improve your position in a year's time? Help you grow. Because everyone wants to sort of get that game produced, get it out, and then it's sort of then sitting down and working out what's the next stage as well, so we can sort of put plans in place. So once you've got that game out, you're getting your cash in from that. How are you then going to the next development cycle? How are you going to reinvest those in? Think about not just now, but the next year, next 2 years.
Well, that's really great, really thoughtful. So it's a lot more than you normally get from an accountant. There aren't many accountants that understand the games business very well in this country. Just as a final question, do you also offer services outside of the UK? Was it very UK centric what you do?
Yeah, well, actually, we are as Elliott's itself. We're part of what's known as Elliott Group, which is it's like an affiliation of it's both accountancy and legal practices based around the world. So I think we're in about 70 countries. Here's where you ask me how many firms, and I can never remember. About 150. But we do quite a lot of work cross border. So we have in the past I've done a lot of work with our member firm in the Netherlands. So cross border issues there. VAT registering, places. Currently dealing with a company who maybe come from the UK from Turkey recently. So we've helped them sort of establish over here, and now basically over in Turkey, their parent company we've introduced them to our member firm over in Turkey. We're helping them with their Turkey side of things as well. So it's for the firm of our size, we are very well set up for helping with international issues.
Thank you. I mean, the main territory in video games is still the US, a huge territory. Do you have an affiliate there and an understanding of the tax practices and tax breaks there as well?
Yeah, I mean, we have a number of affiliates over in the US as well. So there's a few on the East Coast, sort of New York and things like that, a few on the West Coast, and in between. So now it's definitely an area. In fact, one of the developers I work with, they are one of their companies is based in the US. So I flew over to sunny Connecticut in February, which was -7 degrees, I think. So that was good fun.
Thank you. I think that's about it from me. I really appreciate you delving into some of those tax issues for us. I'm sure that everyone's going to get a lot of value out of what you said today.
No, great. No, I'm more than happy to. It's been great. Thanks, Simon.